Hey everyone, welcome to the trade study. This is the first YouTube video I put together. I wanted to explain exponential moving averages or EMAs. This is an indicator that is popularly used, one of my favorites to use while looking at trading setups or just overall investing into companies following the trend of the stock, how it's performing. As you know, stocks tend to move in waves. You're not going to get a shoot straight up or a shoot straight down. You're going to get waves of price movement fluctuating up and down. Therefore, you get this movement that's kind of sailing upwards. Sometimes then it's going a little bit down a hill. And pretty much what the EMAs do is help identify the direction and trend without using technical analysis. Trend lines, you can use that as well to kind of identify the channels for those of you who study technical analysis. But I'm just going to be focusing on this teal line, the 9 EMA, and the 21 EMA on the pink line, and how to set it up on your Thinkorswim platform as well. I'll cover that at the end. But let's get into it. What exactly is an exponential moving average? So specifically, it is a moving average. Different from the simple moving average, which you may have heard of. And what the simple moving average is that it's going to take the average of the closing price of the stock on that specific trading day. Whereas the exponential moving average is an indicator that's going to be telling you that it places a greater significance on most recent price action over the last defined length of time. So SMA 9, a simple moving average 9 versus an exponential moving average of 9 will actually be similar, but you'll notice because that the exponential moving average is going to have more weight on the recent price action, therefore it's going to have more sensitivity and give you a clue on where the price is going to be heading towards next. And what I like to pull up actually is let me see here. I have a pretty good example here on Investopedia. They have the formula. I'm not going to get into all of that, but oh, here we go. This is what I was looking for. A great example of how you have the exponential moving average and the simple moving average compared against each other, and they use the 15-day moving average as their defined length of time. You're going to notice that the exponential moving average actually responds faster to the simple moving average. Check that out. It's lower than the simple moving average. You can see that the candles on the stock price is going downwards, whereas the simple moving average is a little bit higher. So I like to use the exponential moving average because it kind of gives me an alert or a heads up more on where the direction of the stock is going to be moving, and the sensitivity as well as higher on the exponential moving average versus the simple moving average. There's some pretty good information on this website too, but what I want to cover and show you guys why I like the exponential moving average is very simple. But before we do that, some common lengths that are used are the 9, the 21, the 50, the 200. What do these numbers mean exactly? If it's a 9, it covers days length of 9 trading days. If it's the 21, it's going to cover a larger time frame, 50, 200. I think you get the idea here. You're looking at 200 days of data and price points, which overall it's more data that is being compared. So if you think about it, if a 921, if let's say the 9 EMA here crosses down on the 21 EMA, right? So what this means is that in a shorter time frame, you are experiencing a stock price decrease greater than the 21-day moving average. And what that means is that it's going to send a negative signal, a negative sentiment, and a bearish case that the stock price has further room to move down. And you can see that in this example with Microsoft, where you have this cross right here. I'm going to do a little circle here. When that cross happens, you can see the further confirmation on these candles, which represent a day's worth of trading, that the stock continues to go downwards until it reaches a low of $132.52. Interestingly enough, when the stock reaches the bottom, you now have a cross upwards of the 9 EMA going above the 21 EMA highlighted right here. And when that happens, it gives a confirmation towards investors and traders, hey, there seems to be a change in direction, the trend is up, and if you notice, the stock price, like I mentioned in the beginning, tends to move in waves. You see that it's hugging and respecting that 9 EMA line and the 21 EMA. And if the stock does tend to trade below that, like we saw here in February, then you get that cross of the 9 on the 21, and it's going to tell you, hey, there's more room for pain going downside to the downside for the stock price. So as we look at that and fast forward here, we have in April a cross up. We see amazing recovery in the stock price over time, and notice how it's hugging this EMA. And this continues from April all the way to August. We got a little bit of here, the 9 EMA clashing here with the 21 EMA, but as you notice, it bounces off of it, and it continues that trend. We then see another cross here from the trading of the high of the 52-week high at $232.86. And then we have, here we go, now I'm going to highlight this, the cross here, and we experience almost about a $30 drop over the course of 5 days, 6 days here. So there's definitely a lot going on just on this time frame here on this daily chart. As you could see, that confirmation, we're going down, and then we are going back up again after a couple more days. That's about like 2 weeks of time or 3 weeks, and we get that cross again, which then tells us that, hey, we're in the middle of trading upwards again. And then as we fast forward to now, it looks like we're about to get another cross on the 9 EMA on the 20 going under the 21, which would then give the signal of, hey, there's going to be more selling pressure coming in and the stock price may drop down. Interesting thing to note about these highlighted areas, especially here in the beginning where you had the vast majority of the move, is that, what do you notice here? We have volume, the number of transactions that are taking place that is trading for the stock. It is going from a lower level to higher, 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 and when these big moves happen, you are experiencing a higher level of trading, which is going to tell you that there is everybody stepping in and following this confirmation of, hey, there is going to be more pain ahead for this company. The stock continues downwards, and notice how the volume then tends to cool down just a bit. It builds up again as it reaches this critical point. We are at highest levels of trading right here with increased volume as we reach the 52-week low here on the daily chart. It calms down, calms down. Notice how we're getting close to this approaching crossover here. And guess what happens? We get actually a little spike of volume right here, increasing, telling you that, hey, there's interest and that there's momentum going upwards. And then from there, you'll notice that the volume has settled and they are okay with the momentum here and cruising along this average of the 9 and the 21 EMA. Everything seems to remain steady here. And you even see a spike right around here, right? And an even higher spike of volume. Guess what happened? Boom, right there. The bounce. Oh, that was a kind of a bad, hold on, let me fix that. There we go. The bounce from the 9 EMA to the 21 EMA. High volume trading, and we are cruising back upwards to highs. I think you get the pattern right now. A lot of investors and traders use these exponential moving averages to get an idea of how to set up your positions for long-term accounts or even trading to identify a sentiment, bullish or bearish, or a trend. So that is one of the most powerful things about the exponential moving average. It's very simple and straightforward, and you're just following the trend overall on these averages. How do you set these up on your Thinkorswim platform? Very easy. What you could do is, let me get rid of them first here. So we could do this from scratch. I'm going to remove these, yes. And I'm going to remove the 21 EMA. So what you'll do is you'll go up here. You're going to go to Add Study. And you're going to scroll down all the way to Moving Averages. Exponential Average. Here we go. Moving Average Exponential. You're going to add 2 of them. So we'll do the same thing. Moving averages, moving average exponential. Now you have 2 of them here. Let's edit one of them. The 9 is okay. We'll keep that. What I'm going to do is I'm going to change the length here, which is 21. I'm going to change it to this color here, so I'm able to differentiate between the 2, and you don't have to change anything else here. All the default settings are good to go, and you'll be ready to rock and roll. And you have your 9 and 21 EMA set up and good to go. What you could also do is, let's say you have multiple charts and you don't have this set up, right? So I'm going to remove these again. And you don't want to go through the same process over and over again. So you go to Studies, Load Study Set. Your EMAs 9 and 21. So it's the same thing that I had from before. How did I save this preset? Well, if you go to Add Studies or Edit Studies, I'm sorry, and from the 9 and 21 EMA that we added here, we could save it as a set. I have it there, my EMAs. And you can also add your studies from here as well. You could type it in, Moving Average Exponential. And that's another way of setting it up as well. So guys, this was a very short video on moving average exponential using the 9 and the 21 EMA indicator. There's a lot more to this, but this was just a brief overview. If you guys like the video, have any comments or suggestions, please throw me a like, throw a follow if you're interested in more in this content, and I'll see you in the next one.